Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to present the webinar Asian Session Live Market Analysis from 5 GMT up to 5:45 GMT on 10th of December, that is today, Monday. I'll be explaining the expected market moves for this particular week, 10th to 14th of December, and what could be the market reading for the day and also for the rest of the week. Besides, I'll also be explaining with regard to the trading strategy, what we could do even though we try to perceive the market with the right objective, but still our reading can go wrong. So to limit the risk, we need to use the trading strategy. Now let me just analyze the current market condition with the help of the live market quote page. So I will give the link for the live market quote page in the chat window. If you want, you can open it in your browser, otherwise you can follow it here. Now you find currently euro is trading below that of 1.29, the psychological level, and trading around 1.2897, 1.2898. The high was 1.2916, the low was 1.2888. During start of the session, they set the low, still they are not breached it, and you come across about 29 pips negative net change during the mid-session. Now in the case of USD Yen, it is currently trading around 82.40.42. 82.64 was the high, and 82.42 was the initial low. They breached the low by 2 pips. And currently it is trading with 9 pips negative net change. When euro is trading with negative net change and USD Yen is also trading in negative net change, we know that it is a contrarian move. Besides, USD GBP USD is also trading with a negative net change, and they have breached the low in the case of USD GBP USD, and currently trading around 1.6022 to 1.6025. 1.6043 is the high, 1.6022 was the low, and they breached it and formed 1.6018. Now, coming to that of CHF, they are not breached the high or the low, but it is showing positive net change, and currently trading around 93.60.62. 93.71 is the high, 93.49 is the low. You find in all majors a narrow spread between the high and the low from the start of the session. But in the case of commodity pairs, you find USD CAD currently trading around 98.77, 98.80. 98.80 is the high, and 98.66 is the low, and showing 8 pips negative net change. That means USD CAD is making the USD weakening move by making a negative net change or 8 pips dip from that of Friday close. But Australian dollar, which is trading around 1.047173, 1.0492 is the high, 1.0466 is the low, showing 16 pips negative net change. So when both the commodity pairs are showing negative net change, we know that it is a contrarian move. So the contrarian move, USD CAD is showing USD weakening move, Australian dollar is showing USD gaining move. So when they make opposite of this sort of move, we call it as a contrarian move. Similarly, Euro, USD Yen and GBP USD are showing negative net change, which is yet another contrarian move. And also in the case of Euro and USD CHF, Euro has made about 30 pips negative net change, whereas USD CHF is making only 13 pips negative positive net change. So it is not equal or almost closer to that. Not a corresponding rise is seen in the case of USD CHF, even though Euro has dropped about 30 pips from that of Friday close. So that is yet another contrarian move in order to make a lower level move in the case of Euro CHF cross. So when they are handling the cross and making contrarian move, we can just look into that of the crosses, and Euro Yen is making negative net change around 106. It is trading 106.25 is the low. It is holding near the low. and they are expected to make a brief downward stop, and probably they might take the stops below that of 106 and then start gaining the levels as a one-sided gain again, and they are expected to go above that of 107.70 this time. And Euro GBP, which was trading around 81, and many were expecting that it will go to 81.60 and things like that, but before that they made more dip in the case of Euro and less dip in the case of GBP. As a result, it has come to 80.40, 8.80.50, showing about 10 pips negative net change. In the case of Euro CHF, which was trading around 1.21, which has made a nominal dip, and because they have been holding USD CHF at a lower level without making corresponding gain to that of the Euro drop, as a result it has made a dip of about 8 pips. Then similarly you come across all the crosses showing this negative net change, and that is mainly the weak beginning false move. So weak beginning, they try to handle the majors and also the crosses and try to give an impression that it could be an opposite move from that of Friday close, and many might be thinking that non-farm payroll was positive, so as a result you could come across more USD gaining move. But you know that after the announcement of non-farm payroll on Friday, they made that dip and made the move in such a way as if it is going to have a free fall. So that is how they just make the dip, cut the low by 1 pip, 1 pip, 1 pip, and test the patience of the traders. So as a result, when there is a small gain, immediately those who are holding the long positions liquidate their long out of fear, or during the dip they cut that lower the long positions what they had taken at a higher level, and those things are being absorbed by that of the players. Now you will find that they don't make pre-fall and they just make the consolidation around that of the low. Probably in one or two pairs they may just make the brief stop, and in the case of GBP they had done the brief downward stop, and I'll explain with the help of the initial lows and the highs. So in the case of USD Yen, again they made the brief downward stop, which is mainly to make the dip in the case of GBP Yen cross. When they make a contrarian move of this nature, GBP Yen has made about 35 pips negative net change, which has come below that of the psychological level 132. 132, they wanted to just take out the stops below that, and afterwards they are expected to gain the levels again. Because last week you know that Euro Yen was primarily targeted because many of the traders thinking that Euro US could be weak and it just reached the high, and so obviously we can short Euro Yen around 107. So the players were holding at a higher level and inducing all the short sellers to do the short covering, and then subsequently now for the week beginning again they made the dip, and people might think that it could make for the fall and again get trapped by shorting, and later on they will make one-sided rise above that of last week high. So this is the way they try to make the moves in the market, so that the traders continue to get trapped when they strictly follow the technical analysis. Now coming to that of the derived forecast for this particular week, with the help of the next slide I'll explain to you. So today is 10th of December, Monday, so it is a week beginning. So after the trend reversal moves during that of the previous week and the week before was the last week of the month of November, and last week was the first week of December. So month end and new month beginning time, they show the monthly trend reversals. So that is why I was explaining everybody that not to do the position trade, don't become bullish in the case of Euro and GBP, simply don't hold, and they will just discourage the long holders and later on buy it and then continue to rise. So that is why I have been suggesting to the small traders that during that of the trend reversals you aim for only swing trades. You can still continue to do the buy and sell trade, and there is no need to do sell and buy or either way trades, and you can wait for the drop, and near that of the low you can always take a buy and keep stop at entry once the position makes profit, and then try to close it within the session or within the day. And that sort of trade, if we could have done it last week, and from today onwards you can do position trade. So because the market is expected to make the trending move. How they do the trending move? They just make the week beginning false move. So swing and slide move could be seen during Japanese session, followed by that of the dip during early European session as a week beginning false move, and then rise from that of the late European through US session. So that is expected today. I'll explain with the help of another slide in detail. Then on 11th, tomorrow, they are expected to make a dip during Japanese session, followed by either way quick moves, and that is to discourage both, take out the stop of both the short sellers as well as the long holders, so that they try to book profit of their whatever they buy today and book profit tomorrow by gaining the levels, and short sellers will come for short covering. Then again they will make a drop. Why they are doing this? They sometimes do it on Wednesday or on Tuesday. So once they just accumulate the position and book profit, and then subsequently they buy it at a lower level, their average buy level comes below that of the market. So if even sudden calamity happens in the world and the market crashes, then they will not be hurt, because their buy level is much lower than that of the market level. They will be able to immediately exit out of their long positions. That is why before accumulating, what they do is they do the swing trades and build the profit. With the help of the profit, they just try to accumulate more long positions, and their average long will be much lower than that of the market. Then once they gain the levels, they can even buy it at a higher level and rise the market. Still, their average buy will be below that of the market at any given time. So this is a strategy they do just to do it, and because of that they make the week beginning false move. So we need to read that, and we know very well, okay, whatever the move they intend to do it during the rest of the week, they are expected to make the move opposite to that. So during today's drop, one can buy and then try to book profit tomorrow, and whenever they make a downward stop, and you try to buy again and then try to do the position trade for the week. Then 12th of December, rise during the Japanese session, followed by the dip and quick rise. So they may make a pretension, a small dip, but may not breach the lows at that time. Then make quick rise during European and US sessions. Then 13th of December, that is Thursday, swing and rise move during that of the Japanese session, followed by that intentional rise. They will continue to rise slowly. So throughout the day or two sessions, and from that of the late Japanese session, they will try to continue to make the rise. Then Friday, weekend, so they have to trap the short sellers. Then quick rise during that of the Japanese session, little bit of volatile moves during that of the European session, because many traders will go in for the breakout trades above that of the high. So they bring in that volatile move and try to make the drop, so that those who are taken by above that of the resistance, they will be stopped out. Then they continue to rise during that of the US session. So whatever the trading plan that traders make, the players have got a solution to trap them. So we need to understand that whenever the players try to trap the traders, we have to take the position. That is the only way by which we will be able to avoid getting hurt or losing the money in the market. Then the next week, 17th to 21st, will be the third week of this particular month. So swing and rise moves and more upward trending moves could be seen, and visible trending moves could be seen, and everybody will turn again bullish. Now if we say in fxtrade.net, a lot of people and a lot of analysts are interacting, and they are expecting for the drop, and or just developing a bearish sentiment. Also the US non-farm payroll, which was very good. So obviously the people developed the feel that USD gaining moves could be seen for the year end. But the players, that they create the market sentiment and act against that of the traders every time. So they are neither bullish nor bearish, because it is a group, so in which they take the buy positions and subsequently exit out of the positions. There is no fight between the bulls and the bears in the market as far as the players are concerned. So that we need to understand. But we have been given a lot of informations in order to misguide. But we have to find out what is the truth in it, and which one we are supposed to use it, which one we are supposed to ignore. We should be able to discriminate. Now, coming to that of the initial lows and the highs, I'll just compare it with the help of the live market code page. See, euro formed the low 1.2888, which has not been breached. So even though euro has made about 33 pips negative net change, and still the initial low what they have set during start of the day, they have not breached it, and then the high is also not breached. They are simply holding below that of the psychological level 1.29, inducing the traders to develop the bearish feel. Then in the case of GBP, as I explained, 1.6022 was the initial low. They have just breached it by 4 pips and holding below that of 1.6022 now for more than 30 minutes. 60.21 they are holding it. So they could make another downward stop and during the late European session, late Japanese session and start of the European session. Probably they may go up to 1.6008 or 05, and wherever they find the stops, they try to hit the stops. And also this sort of dip in the case of GBP is mainly to create that sentiment in the market, bearish sentiment in the market, because GBP is less traded when compared to that of euro. In order to push down, they have to spend a lot of money or invest a lot of money to take the sell position. Even though they do the circular trades, they sell and they from another counter, another terminal, they try to buy it. But here in the case of GBP, it is easy for them to push it down because relatively the volume is less. So they try to make a small dip in GBP. So immediately everybody will think that euro is going to fall and they will try to sell euro. Then they try to rise GBP followed by that euro. So that is a way they try to trap the traders on a daily basis. But we need to understand how they are able to play the trick, and still knowingly we get trapped. That is an unfortunate situation. Then in the case of USD yen, as I explained, 80.46 was the initial low, and they formed 82.46 was the initial low, and 82.38 has become the low, new low, and currently trading around 82.41, below that of the initial low. So which is making the USD weakening move. So USD weakening move is shown by that of USD yen and USD CAD, but USD CHF is making USD gaining move among that of the denominator currencies. So this USD yen also they will try to push it when GBP is making a dip, so that they will be able to handle GBP yen. No, 131.98 is the low. Probably they could make another 10 to 15 pips downward stop and below that, and then try to rise. Probably the euro yen short sellers would have done the short covering last week, and afterwards they are making a drop. So anybody who has gone short last week might be thinking, I could have waited for another week, then they would have dropped and I could have closed it. So immediately what they do, they reinstate, because they cannot sell now at 107, so they will try to reinstate the sell and decide, okay, if they rise further, I'll take further sell. But this time the players will try to continue to rise and go to 108 or above, and then try to induce them to do the short covering. So this is how they create the market sentiments, by making a dip, and later on they trap the traders by making the opposite move on a daily basis and also weekly, monthly basis. Then in the case of CHF, USD CHF, they are not breached the low 93.49 or the high 93.71. So similar to that of Euro, and USD CHF is making the swing within the initial low and the high. So they are targeting at the moment USD Yen and GBP, and also the respective crosses. The crosses of Yen, crosses of GBP are being targeted. So you can easily identify what are the crosses they try to trap, and then try to see that when they are making a double edge effect, that is making a drop in the case of numerator currency, making the drop in the case of denominator currency, once they stop cutting the new low in the case of USD Yen and also in the case of GBP for 30 minutes during the mid session, you can try to initiate a, and also in the case of the respective cross, if they stop cutting the low for 30 minutes, you can just take the buy. You will be able to really see that you can keep stop at entry, and later on they will try to make the rise, then trail the stop and book profit. Today and tomorrow try to do swing trade, and from tomorrow onwards you can do position trade. Then in the case of commodity pairs, USD CAD 98.66 is the low and 98.80 is the high. See, 98.66 they formed the low, which is not breached, whereas 98.78 was the high. They breached the high, and that shows that USD gaining move. When USD CAD rises, USD gaining move they want to do. But actually what they do is, in the case of USD CAD, they do on a daily basis either way stop-ins. One downward stop-in followed by upward stop-in. The next day upward stop-in followed by downward stop-in. That sort of moves they do it in the case of, sometimes even during the sessions, between the sessions they make up and downward stop-ins in the case of USD CAD. So whenever they make a downward stop-in buy, whenever they make a upward stop-in, you would just book profit. That way you can do it in the case of USD CAD. In Australian dollar, 1.0466 is the low, 1.0492 is the high. They are not breached the low or the high. So only in the case of USD CAD they breached the high. No, USD CAD they breached the initial high, whereas in the case of USD Yen they breached the initial low. They breached the, both are denominator currencies. USD Yen they breached the initial low, whereas in the case of USD CAD they breached the initial high. So this is how they make the contrarian move in order to hit the stops. So people will be wondering how or normally there is a general feel among the traders that, or a lot of reports say that in the cross a lot of activities happen because of that the majors have been pushed up or down, but it is other way about. So most of the information which are shared with that of the traders are opposite to that of what is being done in the market. So that we need to understand. And you know that since most of the analysis, most of the comments, market comments, etc., which are available free, so it spreads very fast. Whatever the misguidance they give, which spreads very fast, and any technical analyst or any of the market commentators, they feel that unless and otherwise they don't use that particular word, then they might become unpopular. Say for example, when initially carry trade was introduced, the word carry trade was introduced when the one-sided rise was happening in the case of yen and yen crosses. Then every analyst started using the word carry trade and started giving explanation that people were borrowing from Japan and investing in New Zealand and other places where they are getting higher interest rate and they are able to get a free money. As if the government of New Zealand is not aware of it. Only the traders are fortunate to know about it and buy money from Japan and invest in New Zealand to get the interest differentials. So this is how they just spread it. And if we think that we are the only blessed one to get such informations, then we will get trapped. And after all the carry trade stories, they made a big drop in the case of USD Yen and Yen crosses. That's all. whatever the money they earned, and also the trading platforms were offering overnight interest for such carry trades of the buy positions in the case of yen crosses. And they made a very big drop and swiped out. So please understand that what is available to us, we have to judicially see whether it is a real information given to us or it is the information to create the market sentiment. Then today's expected market moves, swing and slide moves are expected during the Japanese session, and on Friday itself in the blog I just said that now this is the time for the buy. So today's late European Japanese session and the early European session, the session start times are given, session timings are given here. So around 7 to 8:30 GMT, you try to pick up the buy positions and try to use the hedging order or the stop to limit the risk, and then try to see that you are able to book profit during the US session or tomorrow during the Japanese session, because after the rise during Japanese session they are expected to make either way volatile moves, gain quickly during early European session and drop during late European session, upward stop and during early European session, downward stop and during that of the late European session they are expected to do. So book profit during upward stop and then don't do sell and buy, then you tend to develop the sentiment. So wait for the next drop, then when they make a downward stop and you try to buy and say that okay, I can act smarter than that of the players. As long as they are human, the players are human, another human can outsmart. And if there are gods, then it is extremely difficult for us to outsmart. But as long as they are human, we can outsmart them. Then during the US session tomorrow they are expected to make the swing and rise. So second week of the month, more upward trending moves are expected to continue to do the buy and sell trade. And it is not that I am bullish or something like that. Many people think that I am bullish in Euro and GBP in spite of the fundamental economic conditions in the respective countries, etc. See, I am not in a position to change the economic conditions of the respective countries, or any trader for that matter, or any analyst for that matter, even though I can do in-depth analysis of the fundamentals, of the technicals, but we cannot do any changes. Even the government find it extremely difficult to change the economic conditions, and they are not in a position to avert even the double recessions, etc. So what as small traders we can do? But whatever the conditions or whatever the sentiments the players create, they need to act against that of the traders. Then they will say that the trading perception is different from that of the fundamentals. Then they will say technically the market was oversold because of that Euro and GBP has gone up. So we continue to get excuses that way. Then when technically the market has gone up, then the fundamental news will come and they will say fundamentally Euro and GBP cannot go higher, they will make a drop. So where is the question of attaching any sentiment towards any respective country currency? It is they are all tradable. We have to find out which way we can do the trades, and as long as we take the leveraged positions, and such positions are to be liquidated in the market. We can't take delivery unless and otherwise you participate in the spot market or do the currency conversion trade. So in such a scenario, we need to understand which way we have to do the trades. So you can read all the information provided in the web and also in various other sites and also in various places, but use your common sense and use your discriminating ability to find out what they are trying to do it. Then don't try to commit the same mistakes again and again. So if there are questions, I am willing to answer the questions, so I'll just keep the chat box here so that others can also see. Okay. Then Anil Mangal has got a question. How much are you expecting to drop before entering a buy? So as I explained that they had done the downward stop in the case of GBP to create the sentiment. So probably euro they may not do. They may come up to that of the low and then start gaining the level. Because on Friday they had done in the case of euro more drop, but GBP they have been holding and gaining during that of the US session to 1.6045. So since euro is already there dropped, they wanted to hold and just make the GBP drop to create the market sentiment just by another about 10 pips maximum in the case of GBP. So, but still, they are all nothing but the theoretical estimation. 10 pips is an approximation. So, you have to see that you are keeping the stop below that 1.5980 or 85 and things like that. Try to limit the risk, and once the position makes profit, keep stop at entry, so that you need not tend to blame anybody, and at the same time you will not make any loss in trading. Then when they start making the gains, then you trail the stop and carefully watch. During the session close time, they will try to make the opposite of the session start time move. Then try to exit of the position or keep that stop at entry and wait for the intraday trade. Also wait till the end of your session and book profit. So if they drop also suddenly, no problem, you will not make any profit, but you will not lose as well. So this trading strategy is very important. At least keep stop at entry. If not any sophisticated trading strategies, you see, try to keep stop at entry. Then B winner effects. Last Friday US session, was it intentional move in euro? They made the intentional move on the downside for 2 sessions, and then they made it accumulated buy, because they have built the sell positions on Monday and Tuesday. I was explaining in the last week webinar, if you remember that, they intend to make volatile moves in this week, and we cannot afford to do high level buys. See, they at that time, if you see in fxtrade.net, everybody was bullish, and even in FXTrade website it was mentioned that it is only a correction. I think they only quoted from some expert, and they said that it is only a correction in the bullish trend. But when the trader holds a buy position, not able to book profit for a week, then immediately he becomes demoralized and he will liquidate, even though the information was correct. So that is how the players test the patience of the traders. So what we need to have patience. If they try to test our patience, let us develop patience and calmly wait with our less positions, so that they cannot make margin call for us, because many of the traders have got the tendency to avoid keeping stop, and also they avoid keeping hedging, because if it is hedged we get struck and we need to know how to get rid of it, and there are a lot of complications. That is how they feel it. But let me explain again here that if you are hedged, you don't require any more strategy, and in case if the market moves quite far away from your hedged position, in all the platform offering hedging, there is a provision, close with the hedging. So you can simply close the position with the hedging with the already determined loss. If you have kept about 25 pips hedging order or 30 pips hedging order, you can simply close it with 30 pips, even though the market would have moved about 100 200 pips away from you, doesn't matter. But if you use stop, instantaneously the position is closed. But if you use the hedging, you get the time, breather time, to find out whether it is necessary for you to close the position. Otherwise, whether you can do either way trades, that sort of judgment you will be able to do it if you hold the position. If you don't hold positions, you are expected to take another position in order to make up the loss, but you are afraid at that time. After a loss, normally the traders keep away from the market for a while and become emotionally calm, and later on only think of another position, but by the time the opportunity would have gone. But if you use the hedging, you have the facility to evaluate the market holding the hedged position. Hope you are able to understand what I am trying to tell you. Audi. Please explain how to trade the contrarian move. Whenever they are making a contrarian move like this, all these things, understand that they are busy handling the crosses. There's no point in taking position in the majors at that time. As I explained, that they do it during the mid sessions. So the session time 7:30 GMT is the close of Japanese session. The last 1.5 hours from 6 to 7:30 GMT, they will be handling the majors. So if you want to take the positions if you want to take the position in majors, then you have to wait for 6 GMT to come, and afterwards see whether they are closer to low and not breach the low for 30 minutes, and then try to take the buy position. Otherwise, wait for the new session starts and see from 8 to 8:30 GMT. If they are not breaching the low, you can take a buy position. And also explained, there is a gap between 7:30 to 8, and that is known as the gap time. They always try to make a false move during the gap time. If you are able to understand it well, then during the gap time, they make a dip, try to buy it. During the gap time, if they try to take a rise, wait for the session start to drop, then try to take the buy position. So if you understand the timings, then you will not feel that you have missed that opportunity. Because many of the traders, what they find is when the euro is holding here like this, and session close time, if they firm up, immediately they think that they have missed that opportunity of buying it, and they go in a hurry and buy it. Later on gap time, they make a dip and they become disappointed. So following that market timing is very, very vital. Market timing followed by that of the players. So whenever they are making contrarian move, understand they are pushing down euro and pushing down USD yen and also GBP. So see that during that of around 6 GMT, they are not breaching the low set here, and try to take a buy in the cross, euro yen or GBP yen. That's what. Then afterwards they will try to make the rise in the case of euro, rise in the case of USD and rise in the case of GBP. During US session you will find all the three will be showing positive net change, and that commodity pairs will be showing the USD weakening move at that time. Now they are showing contrarian. You can note down whatever I am telling you, or which is also recorded. You can later on observe, and you will be able to see that it is really predictable. Their moves we can easily understand. We don't require any sophisticated tools to understand all those things. What could be possible impact of physical cliff on euro and GBP? See, my forecast algorithm says that euro and GBP are expected to make further gains. So physical cliff could give a positive impact for euro and GBP. That's what I can tell you. Because I am not a competent person to make an analysis with regard to the fundamental informations. Then Arifullah Beg, how about USD CHF? Can we please explain? USD CHF, they are making a swing, and slowly if you watch it, it was trading around 0.92 to 93, and now they have pushed it up to 93 to 94. Slowly they are gaining the levels in the case of USD CHF, and when euro is gaining to 1.3031 and things like that, they are not making a drop in the case of USD CHF, corresponding drop. So if they are near the low, you can try to take a buy, and when they are making an upward move, try to book profit. At least keep stop at entry and try to do the position trade on the upside. USD CHF, they are expected to make further gains, because as I explained, they tend to make this sort of contrarian moves. When they make this sort of contrarian move, when euro is rising, if you try to take a sell position in USD CHF, then you might be trapped, because they may rise in the case of USD CHF also. On Friday, you know that initially when euro was going up, CHF was also showing positive net change. That's how they had done it. Then Arifullah, okay, I explained it. Then Anil Mangal, Aussie at the top of the daily wage. Do you expect it to break out or fall to? It is expected to break out and show 1.05. Probably they may just make an upward stop and and then later on you might find that it is making one big drop tomorrow using some fundamental data and things like that, and start claiming back. So in the process, what will happen? One step up, two step downward, one step up, two step downward. That sort of moves they will try to do it in the case of Australian dollar, whereas in the case of euro and GBP, one step down, two step up. That sort of moves they will try to make it in the case of euro and GBP. And in the case of USD yen and USD CHF, they are expected to make the one-sided gains. And in the case of Canadian dollar, either way upward and that downward stop and alternatively. So it will be hovering around the same level. Australian dollar will also be hovering around in a range, whereas euro and GBP are expected to gain, and also the denominator USD yen and USD CHF are also expected to gain. So we have to understand what sort of moves they are doing in a week, and they will repeat the same moves every week. And if you see that I am repeating the webinar every Monday, but because they are repeating the moves every week, so that we need to understand. Then Mohan Kumar, by the year end, euro may breach 1.35. Yes, most likely, sir. Okay, you have been trapped. Rifula, yeah, that is bound to happen. You are not the only trader, and there are so many silent traders. They know very well they have been trapped, but they don't open their mouth. No, there is a normal tendency in the market. When traders lose the money, they don't disclose to others. When they gain money, they will say, okay, I gained 30 pips, I gained 50 pips. That sort of projections. It is normal human tendency. We cannot help it. But what I suggest is, let others make money or lose money. That is different. As far as you are concerned, you try to perfect your trading. Ultimately, that is going to help you the purpose of entering into the market, because you are entering into the market in order to make money. So focus on that. Okay, Beeman, with 30 minutes gap opening, drop in euro, we can expect the gap to close very soon. But why do you have such a gap open for the week? I think Beeman is trying to say that there is a downward gap opening and rise, but if you watch carefully, that they are done only about 25 to 30 pips, and that is a normal swing they have to do in order to establish the initial lows and the highs, and later on make use of it as a reference level and then continue, because they have got a very sophisticated technique, the players. Thereby they are able to do the circular trades and gain or drop in the market, but still they are not hurt and they continue to make profit. So unless and otherwise we understand, we may not be able to answer to such questions. I cannot openly discuss in a public forum also. Then he asks, you are still expectation of a range to hold? Yes, sir. Aussie is expected to be in a range. Yeah, around 1.03 to 1.05 area. Okay, fine. Then no more questions. So let me just rush up the slide. So I discussed about the derived forecast, market reading and the trading strategy. And still I give more importance to that of the trading strategy, because ultimately which is going to help us in order to consistently make money from that market. Even though our forecast might be alright, but we might take the position. If we try to miss booking profit, then the market can go against us and we may lose. But if we use the trading strategy, we are very definite that we will consistently make profit and don't make any loss. So these are all the expected market moves for this particular week. So today and tomorrow they will try to make the fooling around moves, and later on they are expected to make the one-sided gaining moves in all the currencies. Then you might say that some fundamental or something like that has acted as a trigger for the market, and because of that the market has gone up. Some attributes can be given, but ultimately the players are now, they are accumulated from Friday. the positions, and they are expected to gain the levels. In the case of the initial lows and the highs, Euro and CHF, they have not breached the low or the high, whereas in the case of GBP, they have breached the low. In the case of USDN, they breached the low, still they are holding below that. Now they have come to GBP around that of the initial low, and USDN still holding below that. Probably they may just make a small dip when Euro GBP is gaining. I think they are done, finished the stop and for just to handle the crosses, and they do not want to really make any real stop and on the downside. So that is why they have come above towards close of the mid session. That means this dip was mainly to handle the crosses, not the major. After 2 hours they have come up, and in the case of Canadian dollar, they breached the high and come below. 98.78 was the initial high, they have come below. So they intend to make the USD weakening move. You can watch carefully, and probably European session start, they may make a small dip and then gain the levels. I think they have finished already, they are trapped the traders. Swing and slide moves may be seen during that of the Japanese session, and they may make a small dip after small gain during towards close of Japanese session, it appears. So we have to fine tune this forecast using the market trading with the help of the live market quote page. Then European session dip and rise, they are expected. Swing and rise moves are expected during US session. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar, and I'll be presenting the monthly webinar tracking the forex market together on December 12th. So part 1 by 9 GMT and part 2 by 15 GMT. So I request you to come for the same, so that I'll explain to you more in detail the trading strategies pertaining to this. So little more information pertaining to trading strategy, and also how to use the hedging, how effectively you can use the hedging in order to consistently make money from the market. And again, 13th of December, then the very next day, I'll do the Asian session live market analysis, and that will be the follow-up of what the webinar I have given today. So I'll try to do the analysis for the day and also for a weekend, and review whatever the forecast I have given for this week. On Thursday I'll review whether the market has moved in tandem with that of the expected market moves. So in the blog, iknowindices.com/blog, and also fxtrade.net, I will post the expected market moves. Last week and the previous week I have not been posting it, for the simple reason, when I say that swing and rise or swing and firm up, and people during the trend reversal time say that you said market is going up whereas it has come down. So to avoid it, I just avoid posting it. Only on Friday I made the post to say that it is a buy opportunity. So from here onwards you will find the market is expected to go up. So whenever I am not updating the forecast in fxtrade.net, please understand that the market is expected to make a other way move against the long-term trend. So that way, I will avoid controversy happening. So thank you one and all. See you on Wednesday.